Hello investors, welcome back to another video. Today we're going to teach you everything about dividend investing. We will explain what dividend investing is and how you can build a dividend stock portfolio. The first section of this video will show you all the ratios that you need to know while choosing dividend stocks. And the second section will show you how to calculate the nest egg you would require to live off of with your dividends, based on your annual expenses. Before we dive into the details, smash that like button so that the videos will reach to a broader audience. And also, subscribe to our channel to get notifications while we post a new video. Let's get started. Dividend investing is an investment strategy in which investors purchase dividend-paying stocks to generate a regular stream of income. Along with getting regular dividends, investors also get benefit from capital appreciation when the market price of the shares increase. Instead of withholding the dividends, you can also choose to reinvest it. Many mutual funds, stockbrokers, and even some companies give you the option to do it automatically. In financial world, it is called Dividend Reinvestment Plan, or DRIP. When you reinvest your dividend income to buy new stocks of the same company, you automatically amplify the benefits of compounding, which allows you to earn extra return on your money. Dividend payments can vary across different companies. Most companies pay dividends quarterly, while some others pay semi-annually or annually. However, you must remember that there is no guarantee that a company will continue to pay dividends periodically at the same rate. A company's board of directors, based on many factors, may decide to maintain, skip, increase, or decrease the cash dividend. Usually, larger and mature companies that have a slower growth rate pay dividends, whereas smaller companies that grow at a faster rate reinvest their earnings in the business instead of paying out dividends. To build a dividend stock portfolio, you need to analyze some key metrics of the stocks you want to include in your portfolio. Let's discuss the metrics one by one. Number 1. Dividend yield. Dividend yield shows you how much a stock is paying annual dividends as a percentage of its stock price. Suppose a stock paid dividend of $8 per share during the year, and the market price of the share is $100. The dividend yield of the stock would be 8%. In other words, dividend yield gives you an approximate dividend-only return on your investment in a stock. This is the formula to calculate dividend yield. Usually, investors employing dividend investing strategy choose stocks with high dividend yields. However, you should not base your investing decision solely on the dividend yield metric, as many other factors also come into play. For example, the dividend yield of a stock rises when its price declines in the market, and the dividend yield decreases when the market price of the stock rises. The denominator in the dividend yield equation can change the quotient dramatically. So you should exercise caution while interpreting the dividend yield of stocks and look for other metrics as well. The second metric you need to understand is the dividend payout ratio. Dividend payout ratio shows how much dividend per share a company is paying as a percentage of its earnings per share. Suppose a company pays out $2 as cash dividend, while it has earnings per share of $20. The dividend payout ratio would be 10%. This means that the company is paying out 10% of its earnings as dividends to its shareholders. This is the equation for calculating dividend payout ratio. Smaller companies that are in their growth phases are likely to have low or zero dividend payout ratio, because they choose to retain or reinvest the majority of their earnings for expanding the business. The third metric is the total return. While selecting stocks for your dividend investing portfolio, you must look into the total return of the stock. Total return includes dividend payments as well as capital appreciation. There can be situations when a stock price plummets, raising the dividend yield, while reducing the total return of the stock because of the capital depreciation. To understand this, let's say you have invested in a stock at $20 that pays $2 per share as dividend. The stock's dividend yield works out to be 10%. If at the end of the year the stock price plummets to $15, the dividend yield would become 13.3%, whereas in reality you would have lost $3 per share, or 15% of your investment. So the total return will calculate your returns from both dividends and capital appreciation. Number 4 will be price to earnings ratio. The price-to-earnings ratio shows how high or low the market price of a stock is relative to the earnings per share. Suppose a stock is currently trading at $10 per share, while the current earnings per share of the stock is $1. The PE ratio of the stock would be 10. In other words, you can say that the current market price of the stock is 10 times the earnings per share. The PE ratio can also give you insight about the stock and tell you whether the stock is trading fairly priced in comparison to its peers in the industry. Now let's calculate how much money you need to invest in a stock so that you can live off the dividend income. Let's make some assumptions here. Let's say ABC is a stock trading at $10 and have a dividend yield of 10%. Let's also assume that you need $40,000 per annum as passive income to cover your expenses. You can calculate this amount by dividing $40,000 by $10 times 10% and multiplying the whole thing by $10. So for this example, it will be $400,000. Easy, isn't it? Now go and calculate it based on your annual expenses. Once you know the math and have a number in your mind, it will be easier for you to attain it. So in conclusion, dividend investing is one of the best strategies that you can use to create a continuous stream of passive income without much work. However, you should carefully evaluate stocks based on different metrics that we have discussed here. So that's all, folks. Do you have any dividend investing stocks that you are holding? Post in the comment section below. And if you like this video, give us a thumbs up as it motivates us to create new videos. Also, subscribe to our channel to get notifications while we post a new video.